and welcome. You're watching NDTV 24/7. I'm Sonal Mehrotra Kapoor. We are tracking all the details you need to know about the budget. And one big headline from Union Budget 2022 that's really stood out above everything else is on crypto and digital currency. Folks, mark this day, 1st of February 2022 is when crypto officially came in the budget of 2022. With 30% tax on income from sale. Remember, there is no regulation yet, but taxing the digital asset class gives legitimacy to crypto like never before. But it's a high tax, remember, of 30%. Right at the onset, let's just say it's been a mixed bag, but it's been quite a day. Apart from that, the year itself, India, today, has decided that there will be a digital currency. RBI will be regulating that and it will come out this year itself. Over the next 30 minutes, we'll be taking you through all you need to know about the highlights and the takeaways from crypto in the Union Budget of 2022. Let's start with a big bang headline there. Tax is on income, meaning once you buy or sell, you pay about 30% on that amount. Remember, just holding crypto does not make you accountable for the tax. It's the buying and the selling of it. In addition to that, you pay 1% TDS to the exchanges as well. That will be cut over there. Some reports suggest that this will be credited back. We'll have to wait to hear more details on that. Another key point here is any loss you incur on sale of your digital assets cannot be set off against any gains. So you pay taxes regardless of your profits or losses in the crypto market. The other thing to note here is on gifting, and this is key. In case you receive digital assets as gifts as well, the recipient of the asset will have to pay the tax. It's a costly gift, mind you. No regulation yet, basically, but highest category of taxes is the message that has come in from the finance minister. What will this do to the crypto market? Will this mean small-time players will sort of exit and more whales as we know them will remain in the market? What does it tell us about the future of even regulation in the country is what we are going to decode. First up, my guest is Navin Surya. He is the advisory board member for Blockchain and Crypto Assets Council. Navin, what a day for India. We've been talking about it, anticipating it for quite some time, but it's been a mixed bag of sorts truly. On one hand, we got taxation, something the industry had been asking for. On the other hand, a common man invested in crypto today is asking 30%. Really?
Yeah. So, Sonal, good to see you back. First of all, a quick disclaimer. All my views today are not on behalf of BACC. I think the association is still kind of trying to understand. The fine print is still getting analyzed. So we will obviously talk about it officially and BACC will come up with its own release. But yeah, it's an interesting day. Like you already said, mixed one. First, I think we should be extremely happy that India will be few of the countries who will also have a CBDC or a digital currency of its own, which actually I've been personally advocating over the last 8-10 years. Very few people know it. So I'm personally very excited that that would be a reality. And I think in any case, that should have been no-brainer. RBI could have done it independent of whatever happens to private crypto. So that's a good start. While I still believe that some sort of enablement from the parliament will need to be done legally, because under the current act, the currencies can be issued only on a certain format. So to add a virtual type or a digital type, that act enablement might need to be done. But it's a good news. Nevertheless, it shows that everything is ready and within this year, we will see the light of day.
Right.
Second part of code, yeah, go on.
No, please finish your point.
Yeah. The second bit was obviously that in absence of anything from the government, the tax regime was completely open. I think there was issues even of every transaction is subject to GST, which was even more draconian. Will it be treated as an asset? So would you kind of tax it as a typical security transactions, commodity transaction? So currently it was all open for interpretation. So we should thank the government that at least first time they have recognized this category in industry in certain way. I wouldn't jump to the conclusion that it is legitimized yet, because again, taxes are to be paid on whether or legal or illegal proceeds from the income. So that's a separate subject. But yeah, it does say that the government has started recognizing this as a category. They have brought about a definition first time of the legal of these virtual assets, including NFTs. So again,
are you happy with the definition just yet, or do you think the bill really is required to decode what exactly is digital assets, how exactly it will be taxed? Everybody who's holding an NFT today is wondering what's going to happen next.
Yeah. So, Sonal, it's too early for me to comment on the definition. That's where I said that the fine prints needs to be discussed, debated, the interpretation. There will be more clarifications finally on those. So I wouldn't comment on the definition, but I want to say that it's an important step, right? Defining something which does not exist requires a lot of time, effort. Which shows that the government has started working on it. They've put forward at least something very clearly, that how they want to define it. Obviously, now it's for all of us to understand it, keep working with the government and evolve. This is not going to be one-time activity. This industry segment, everything that happens will evolve over a period of time. Take it between 3 to 5 years to reach its a real matured state. So
and
I would say
it's been quite a journey, really, Navin, from ban to now tax, while we wait for a regulation as well. It's been quite a journey. I understand that you're not speaking from the association so far, but at the moment, the quick takeaway for you, what would that be?
Well, it says that the government is looking at it in more positive way. I think they definitely want to immediately clarify certain things and avoid any loss of revenue. At the same time, when you do the tax compliances, you also do immediately certain other compliances. You can do tax compliance only when you've done KYC. So it's an indirect way of also taking care of a lot of KYC, PMLA related issues upfront. Of course, there is a TDS of 1%, which I personally look small, but I think logistically that's going to be more challenging than, let's say, implementing 30%. 30% looks higher. Of course, it is higher. I actually personally believe that that will actually be concern of more bigger players than the smaller players, because those who are going to do a regular trades, those who are going to do a large value block trade, they will start looking at the overall, let's say, where should they do it? Is India the right destination? Is the higher value means higher tax here? So those are, again, as I said, long-term issues, and that will evolve. And those are the discussions that industry will have to start engaging with CBDT and the Finance Ministry on a let's say,
lots of questions there, and not just long-term, several unanswered questions there as well. Navin, I'm afraid that's all the time we have. Thank you so much for joining us. I just want to go across to our rest of the panel as well. And we've got a fantastic panel for you today to try and understand different aspects, from taxation to regulation to how exchanges are seeing it, to how you and I, or perhaps those who are invested in crypto, are going to see this budget as well. Let me welcome on the program, Sachit Jolly is with us, and he is going to decode a lot of those unanswered questions for us. It's been quite a day. Sachit, it's coming to you in a bit. We've got Sridhar with us, tax partner Grant Thornton Bharat, knowledge partners with us at NDTV. We've got Siddharth Ghani with us from Cribaco. We've also got Dr. Aruna Sharma, and we'll be talking all about CBDC. We've been discussing it for a while now, and here it comes, and it's going to come this year itself. So lots to decode over there. And Kashif Raza is with us, another somebody who has a lot of knowledge on what's going on within the system. Let me come to Sachit first. Sachit, big question, what's happening on the taxation front? There are lots of minute details that we still don't know at the moment. For example, to start with, if you are putting in your money, so taxation will happen on income, meaning it's only when you sell and you pay taxes on that amount. But what about transfer of value? What about going, say, from one exchange to the other? How does one sort of look at that space?
Well, I believe that if you just move wallets, as we call, or move exchanges, there is really no transfer. And like you rightly said, the tax incidence is on consideration received on sale or transfer. A person can't sell to himself. So merely because you change, the exchanges change, I don't see that as a transfer of an asset to anybody. It's relocation of an asset in that sense, but I don't see that as a transfer. The challenge will be, how do the tax authorities look at it? Do tax authorities look at each exchange listing as a separate transaction? Well, in that case, you'll have a 1% TDS on each time you relocate your asset from one exchange to the other. And I think that you're right. There is no particular clarity on that. The TDS provision is rather, I won't say loosely worded, but it's more generically worded, and will need some clarification as we see a lot of these questions coming up.
Right.
And I think those general principles of tax should apply here, that you can't make a profit out of yourself. So, when you just relocate to the other exchange, there is really no transfer. That's what my personal view is right now.
Another question, Sachit, really is at this point, and I'm just going straight into understanding what this means for the common man, is a lot of people receive payments in crypto. A lot of people get their salaries in crypto as well, right? There are software engineers, there are, digital content creators, etc. How would that be seen? How does taxation happen on that front when you're receiving a payment, say, in crypto?
Well, there has been an amendment to the Income Tax Act. Section 56 has been amended to include crypto as a property, which if you receive it, could get taxed under 56. The jury is out whether in a case where I'm rendering a service like a content developer, or I'm rendering services as an employee, can 56 at all be triggered? According to me, it should not get triggered. But there's been an amendment, to tax that as gift. But that section doesn't say only if it is a gift that you'll get taxed. So I think that's one. But from a transferor perspective also, let's say there is a company which is paying an employee or a content creator for its services through a crypto. Now for that, it will be treated as a transfer.
I see.
Although it doesn't receive any consideration for the said transfer, and the consideration that it receives is intangible in the sense of a service being received. But, unless there is clarity or an explanation on this, I won't be surprised that if a tax officer today says that the company, since it paid by way of a crypto, it tantamounts to a transfer, and therefore the company should pay tax on the market value of the crypto minus the cost of acquisition. So I think that it's going to lead to a lot of debatable views on this. The jury's still out. Jury's still out,
and lawyers like you and CAs are going to have a hard time and a long night tonight trying to decode what all of this means for people. Let me go to Kashif next. Kashif, you and I have been talking in detail about how this impacts the end consumer, people who are invested in crypto. And just again to underline, often people think that crypto is something that only is there in urban India, in millennials. The truth is, a lot of two-tier cities is where the money is actually coming from. They're putting in a lot of huge chunk of their earnings into crypto. And today they are wondering, hang on, is the party over for us? 30% plus 1% plus the gas fee. What's happening?
Yeah, so you're absolutely right, Sonal. We have seen it in the past that the major influx of people into crypto so they're quite young. And they are from tier B, tier A, tier C cities and towns, small towns of the country. And one thing that has attracted crypto is that people have joined this bandwagon to earn quick money as well. Because when they see, these stories that people making a lot of money into it, so they have definitely entered into this space. And what will happen now after this thing? Because since there is a direct, flat 30% tax, obviously it won't remain that lucrative now. And whenever an individual will try to invest in crypto, they'll definitely consider an option of investing in stocks as well. So they'll definitely figure out this thing that, okay, fine, investing in crypto is a little costlier now. It is not that lucrative. While when you invest in stocks, so there, you have long-term capital gains and short-term capitals gain. There you do not have the flat tax rate. So ultimately, in a sense,
you're making a very important point, Kashif. You're saying this budget and taxation will change the way India looks at crypto now, at least the retail investors, at least the small time investors.
Yeah, definitely. They will look at it, and they will also see, okay, fine, when I invest in stocks, I can treat this income as a business income or a trading income, and I can. The most important part, Sonal, here is that I can set off my losses. So suppose in stocks, if there is a loss, I can carry it forward. Yeah. But in crypto today, if I suffer a loss, I won't be able to carry off. So that will be a huge difference. So in a sense, it won't remain as lucrative as people who are trying to enter into this space for making money. But people who believe in the long-term trajectory, who believe in the long-term, growth of this space will definitely come here and hodl. I think it will be a challenging thing as well well for exchanges as well to make, because earlier there was no regulation, so exchanges were also happy that so many people were coming in to make quick money, and they were also kind of happy about it. But today now it will be challenging for them as well, how they will position their exchanges as an exchange, as a venture where it is like profitable for people.
Yeah, you're
so
right. I've been talking to a lot of exchanges all morning, and they seem to be still in a state of flux, still figuring out which way this is going to be going. I know the rest of panels are waiting as well. Let me quickly slip into a break. When we come back, we'll continue this very fascinating discussion. So many questions answered, but so many of them still remain in the realm of we don't know what's going to happen next. We're going to decode all of that with the panel in a moment from now. Welcome back. We are decoding the crypto takeaways from the budget today. Let me go to Mr. Sridhar next. Mr. Sridhar, your key takeaways, and I understand lots of unanswered questions here, but how exactly are you seeing this?
I think the key takeaway that we see here is that one, government wants to bring out clarity in the way non-state currencies should be taxed, and they're coming down pretty hard on that because it's actually being treated more worse off than even speculative income from an income tax perspective. And therefore, clearly the message is that
it's gambling
we would
standards.
It's
gambling standards, 30%.
Yes, and the 30% is also a message that clearly government doesn't want non-state players to function as currencies, and therefore from a cryptocurrency perspective coming out clearly on that direction, and also giving a sense that non-fungible tokens and other digital assets are also in that class, which is something which is a bit worrying, because we would have liked government to take a more reasonable view on digital assets as a class in themselves, and maybe distinguish crypto to be taxed in a different manner. And that's a bit worrying, because once this is now in the statute book, a 30% tax is a starting point for any further changes to be coming through. And therefore, this is a budget that will set the standard to tax this income without the ability to carry forward any losses, as well as without the ability to...
I think what you're trying to say is that even within digital assets, the industry had been saying that there should be different buckets in which they are looked at. And Siddharth has spoken about this on the channel earlier as well, that there should be different buckets in which you actually look at assets as well. What's happened is all of them have been put under one asset class. Or at least, she didn't even use the word crypto, by the way, in the entire speech. It was just virtual digital assets. So we wait to see how that is going to get decoded. But Siddharth, quick comment?
I have mixed, reactions to this. On one side, from a 10-year jail draft bill, we have moved to a tax thing. So it's a very positive move in those things. I was looking at the fine print, and everywhere it is mentioned as assets. That indicates that in the coming regulations, which we are expecting in mid of this year, we are going to see a bill which classifies this as an asset and not a commodity. I mean, either as an asset or a commodity, and not as a currency. And the good part, when Madam Sitharaman started speaking, she said that she accepted the fact that the ecosystem is growing, and there is a phenomenal increase, and we need a scheme for taxation of virtual currencies, which means they are aware that this industry is growing. But the tax slab, I'm not very happy with it, because a majority of people in India are invested in this space with I think 5 to 50,000 rupees investment. And when you are building something for a nation like India, you have to keep in mind all the different income brackets. So this is unfair to those who are doing it on a very nascent and a smaller level.
But I think that's the messaging, right, from the government. That's the messaging. They're saying, only those who have risk appetite and can pay huge taxes should get into the system. Isn't that
so
what you
in
took
that
away?
case, if you look at the global tax structures, yeah, right. Just look at US for instance. They have made slabs that if you are earning up to 10,000 odd number, you are paying 10%. $10,000, you are paying 10%. From 10,000 to 20,000, you are paying 20%, and so on. So there has to be slab-wise, tax on this, because this definitely discourages somebody. Even a lot of, and especially the TDS aspect of it. A lot of foreign exchanges like Coinbase and other international global exchanges, they're eyeing at India because India is a huge market. It's a huge market, and now their life will be difficult because TDS is something which only, I think it's kind of unique for India and nowhere else. So this will discourage international companies to come in India, invest in Indian startups. So, I mean,
that's worrying indeed. It's the messaging, I think, is very clear for anybody who's reading between the lines here from the finance minister as well. I know Dr. Aruna Sharma has been waiting. We keep talking about crypto. We haven't forgotten CBDC, of course, something that you've personally worked on for so long with the RBI. Ma'am, your thoughts? It's going to be a reality very soon, this year itself, according to the finance minister.
I'll put it this way, that digital currency amendment will set the ball rolling. And a lot of work will have to be done by RBI to translate it into, various steps to make it a reality. But then, yes, now crypto has been bracketed out from the digital currency. It has been named as an asset, a digital asset. But here I will like to make one comment very strongly, that whenever taxation is there, it is not product based. This is something which is confusing me. Income is income from whatever source you are getting it, and then you comes into the various brackets of taxation. Now here, the gains made from crypto as a flat 30% of a tax deduction is something which I don't think so it will stand to the scrutiny of judiciary when you work upon it, and that is something which needs to read the finer print when we go ahead with it. And the average ticket size is very, very low. So you can't subject them to a 30% of taxation, because that is not the kind of gain you expect from the crypto. And crypto is like an alternate portfolio investment as options, which is available to everybody besides the what you have in the securities. So in the securities, when it is the net income which becomes a part of your income, and depending on your bracket of income levels, you are paying the tax. Exactly the same principle should apply here if the moment you start treating it as an asset.
It should.
Now making it a product base, that just because you have invested in crypto and you have gained it from crypto, therefore a flat 30% is something which I think we need to study much more as to how it will be applicable and how you are going to distinguish and go ahead with it.
Right.
Because
first step, really, so what you're saying, there's a long way to go on this one. I know I'm running out of time. I'm sorry I'm interrupting. I know Kashif has a very quick point to make. Quickly.
So, Sonal, I just wanted to add that, it is also not a good news for startups who are there in crypto ecosystem, because there were a lot of startups who have to raise, funds through crypto. And they, every time they have to interact with the open blockchains like Ethereum and Solana. So every time when they do transfer, so is there a taxing event that will arise? And also a lot of, there were a lot of people who were earning 5 to 6 lakh rupees by performing graphic designing and, providing their services to various blockchain companies and crypto companies, and they were getting paid in crypto. So somewhere that segment of people who are close to 50,000 who were directly or indirectly employed with various crypto companies and who are based outside are definitely seeing it as somewhere their income will be taxed at 30% flat. So somewhere for them also it is not a good news. But yes, as Siddharth said, that yes, if you see it from the past, from where we have come, yes, it's a great news from where we have come.
I think to really sum it up really, and I have to wrap up now, but seriously so much still to go, and we'll keep talking about it on the way forward. But to wrap it up really, at least getting a taxation bracket is great, but is this what the industry really wanted? What exactly is the messaging here? Is the government trying to discourage small time players, only asking people who have risk appetite to go ahead ahead and invest in crypto. If that's the messaging, well, we'll see how the markets respond to that. That's it for now. We'll stay tuned to NDTV as our budget entire coverage continues.